Hi, this is CA Feroz. Today we are going to discuss very important topic regarding KSA withholding tax. Here we are going to discuss regarding what the KSA withholding tax is there and what is the DTA between KSA and other countries. So we will discuss here the benefit of DTAs also. Means if you are dealing with KSA and getting money from the KSA after withholding tax, so you must watch this video till the end. So we will start from here. What is the withholding tax? As you know that withholding tax is a tax deducted at source by a Saudi resident payer. We remember by a Saudi resident payer when making payment to non-resident. What the means of non-resident? Non-resident means any other than Saudi resident is called non-resident, or that Saudi resident must remit the withholding tax to JATCA within time. So I hope you understand what is the withholding tax. Withholding tax is very simple. Withholding tax is collected by Saudi resident, and that collection have to or must to remit to JATCA within time. So what the timeline we need to understand here? Key deadline for reporting and payment to JATCA, that is 10th of the following month. We remember 10th of the following month. If you are KSA resident person and you are making the payment to non-resident, that time you have to collect withholding tax, and that collection have to submitted, have to remitted to JATCA within time, is by the 10th of the following month. We remember. I hope this is clear what is the withholding tax. And next slide, here we will understand the standard KSA withholding tax rates. For your understanding, very simple table is that if you are making payment for the management fee, that time you have to withholding tax at 20%. There is, if you are making the payment for royalties, that time 15%, and technical and consultancy service, that is 5%, dividend interest and rate, that is also 5%, insurance premium and international transport, that is also 5% withholding tax is there. Other general service, that time we have to withholding tax is 15%. I think all rate is very simple and you already understand this scenario. Further, from the for suppose that if engineering consultancy service taken by Saudi company and making payment to UAE firm. So, for your understanding, how to calculate withholding tax? Suppose the gross payment is real 100,000, and you know that for the technical and consultancy service there is a withholding tax rate in KSA, that is 5%, and then the what the amount is coming from withholding tax is will be real 5,000. Then what amount have to pay to the UAE firm? That amount should be net amount is real 95,000. Very simple example. I hope it is clear for you. And further, here is for your understanding, since the service is partially performed in KSA, that time also you have to collect withholding taxes full, not the partial. So be remember that. And for next slide, for your understanding, we have to take next example. Next example is very practical example. If branch to branch payment, that time what withholding tax will be applicable on that? Here we will take the example of a UAE company has a registered branch in KSA. The UAE headquarter provide IT support service and charge the KSA branch for those costs. Then we remember what the key consideration here. The KSA branch is likely a permanent establishment of UA entity. This is very clear. Tax in KSA on attributed income. For your understanding, inter-branch payment may be treated as internal cost allocation, not payment to a separate legal entity. We remember, not payments to a separate legal entity. Withholding tax may not apply if no separate legal entity transaction occurs. So in this scenario, if you are following this type of situation, this type of activity, that time there will be no any withholding tax applicable on you. I hope it is clear. Move forward for next example. Suppose that royalty payment made by the Saudi company to UAE software developer. So what will be the withholding tax, and how we can calculate that? So for your understanding, suppose that annual license fee is real 50,000 and withholding tax rate, as you know that on the royalty there is 15%. Then the calculate 50,000 at the rate of 15%, that will be withholding tax is real 7,500. Then what amount need to pay by Saudi company? That will be real 42,500. This is simple calculation. But be remember, in if you are providing, if UAE company is providing proper document for the DTA, you know that what is a DTA? DTA is double tax evasion agreement. If one income is taxable in one country, so that income will not be charged for the tax purpose again. So we will remember, in UAE and KSA there is a DTA. So that time, if you are providing, UAE company is providing timely document and information to KSA company, that time withholding tax will be reduced at the rate of 10%. So you know that what the benefit of DTA? DTA's benefit, that is normally charges withholding tax is 15%. But on applying of DTA, that time that withholding tax rate will be reduced at the rate of 10%. In some scenario, that will be 0%. So in the last segment, we will cover that DTA also. So here we will understand next example. Uh, Before next example, we will cover here KSA UAE DTA rate comparison. So here we will understand, if you are in UAE and providing service UAE to KSA, and KSA resident person making some payment to you, that time if you are applying DTA, what the benefit for this stative benefit we will understand. If there is a technical and consultancy service, straightforward withholding tax is 5%. If you are applying DTA, if you are taking the benefit of treaty, that is 0%. If interest and loan charge, that time withholding tax is 5%. If you are taking the benefit of DTA and provide proper document and information to the KSA resident person, that time is 0%. Similar like that, there is a management fees is 20% withholding tax, that also be 0%, having regard to some condition. Royalty, as you know that there is a withholding tax is 15%, but on applying of DTA, that will be 10%. Dividend is 5%, and similar like that, if DTA is applied, that time is also 5%. So in dividend there is no benefit, but other scenario, other service, definitely you can get the benefit of DTA. So be remember what the document, what the information, and when need to the submit by the UAE company. So in next slide, we will understand what the step have been taken by the UAE company for taking the treaty benefit. For your understanding, first of all, you know that TRC, tax resident certificate. If you are UAE company and providing service to KSA, that time you must be obtained from the UAE FTA authority a TRC. And be remember, the UAE entity must not have a fixed place of business or dependent agent in case. And third condition is beneficial owner, means the recipient must be true and legal owner of the income. Means if you are UAE company, or you must have the beneficial owner of that income. And last point is very important for your understanding, JATCA reporting. So uh, even that transaction is exempted. As you know that if DTA apply, that time some scenario, if technical and consultancy service, that will be zero tax. So but the KSA resident have to report in timely to the JATCA. Otherwise, audit scenario will be applicable on you. So there is a key point of reporting to JATCA, as you know that filing deadline 10th of the following month of payment date. No exception if there. If you are treaty exempted, you have to mention this is treaty exempt, but you have to file your you can withholding tax report to the JATCA 10th of the following month. And as you know that if you are not providing timely information to JATCA, definitely that is a trigger point for the audit. This is very crucial key point is here. So we already discussed the withholding tax, and we already cover here the DTA with the UAE and KSA. So thank you for watching my video. If you like, please comment here. If you have any query regarding DTA or any withholding tax rate and exemption, you can comment here. We will consider that. Thank you very much.